Face off with our adversaries, a terrorist hit in Europe, and a bad jobs report, all coming at the same time, would cause markets to tank. But not so today. Why? Joining me now is an all-star lineup. We got Forbes media chairman Steve Forbes, Barron senior editor Jack Hough, Paul Aversano of Alvarez and Marsal Private Equity, and NatWest chief economist Michelle Girard. Michelle, let's start with you. This market is not getting spooked at all. Why?
Well, first of all, the unemployment rate was not necessarily weak. I mean, absolutely, we had a miss on that headline payroll gain, although, a lot of it's weather, and that data is very noisy. But meanwhile, the unemployment rate fell further. We had an uptick in the, in terms of the labor force. You had very good underlying details in terms of, like, the number of people employed to the population. I mean, the details from a good part of this survey were positive. So I think that helped to cushion some of the initial negative reaction. Steve,
let's talk about the Syrian strike, because in my mind that was a huge positive, not only for the nation in terms of standing up to a war criminal, Assad, and his allies, the Russians, our adversaries, but it also clears the deck for him to do a lot of stuff internally. It gives him political capital for tax cuts, for dealing with China on the North Korean issue, and of course Democratic foot dragging. So is the market enthusiastic about that?
I think the market has to be really in a good mood about doing what we did. It restores credibility to the presidency. It sends a message to North Korea, Iran, Russia, and China that our word means something now. And it also reassures our allies like Japan, South Korea, and others that the U.S. is back in the game. We're not going to be passive. The era of paralysis and appeasement is over. We're back to making sure the bad guys don't dominate the world.
And, Jack, think what you might of Donald Trump. To see him double tasking with the head of China, Xi, down in Mar-a-Lago at the same time that he was calling on strikes, that was pretty impressive.
I can't disagree with you, David. I think this might have been the president's best day since he took office, to be honest with you. And the news here really is, look at the earnings growth, okay? Everybody's talking this morning about, market's going to be rattled. Where's the rattling? The markets are shrugging off these events. The market felt that these events were warranted and reasonable. And when you look at U.S. corporate earnings growth, we might have in the first quarter of double-digit earnings growth since going back to 2011. So the news is broadly good for stock investors.
So, Paul, I would think with the negative news, at least some of these stories could be viewed as negative, that if the market holds up under those conditions, what happens if we do get tax cuts? I mean, I can see no ceiling to this.
Yeah, no, absolutely. I would agree. I think up until recently, the market was buoyed by just psychological anticipation, let's say, of what the Trump administration was going to deliver. If they do deliver on some of their promises, as you said, I think it's going to be very, very positive for the market.
Meanwhile, David was just talking about President Trump's second jobs report. Congressman Kevin Brady saying it's clear there's a lot more work to do to strengthen our economy, and it starts with overhauling our uncompetitive tax code. Paul, I mean, you do due diligence for a living. How much does the tax code weigh on companies' decisions to do business?
Significantly, particularly even outside of the United States. So if you're dealing with global organizations, it's very impactful.
Yeah. Michelle, how much of an impact do you think it has on this jobs report on the economy going forward? The fact that we're moving more slowly than folks thought on both the tax code and also in health care.
Well, we've seen the nervousness in the market. There's some disappointment that things seem to have bogged down in recent months. But I tell you, the confidence numbers continue to be high, even though we haven't seen much forward progress. And again, I don't want to put too much on this March employment report. We're still in the first quarter, we added about 180,000 new jobs per month. At this point in the cycle, with the economy at full employment, that's a very stellar performance. It's a really solid performance, and again, I think it underscores the fact that companies are engaging to some extent even before they have certainty on the tax code. I think that's a reflection of just the regulatory relief that it already is providing a boost to the economy even before we get tax cuts.
Steve, what do you think about that?
Well, I think the jobs report actually was better than the headline news. If you look at the household survey, the job creation there was 472,000. Now, that's a volatile number each month, but it better reflects what's happening with small and new businesses. Second month in a row, you've had a very good report there. So Michelle's thing about deregulation helps. I think small businesses are coming back in the game again. So that jobs report's not nearly as bad as the headline would suggest. American economy is starting to move again.
Jack, you agree with that?
Yeah, don't be freaked out by month-to-month volatility in the number of jobs added. We have warm weather to begin the year. Some of those construction jobs were pulled forward, so it's normal that you'd see a bit of a come down on the number. I think it's a healthy jobs report. I think the economy is gaining steam.
Paul, was that your read?
Yeah, absolutely. I agree. And I would also stress, and you've heard me say this before, the jobs report is just one data point. It's impacted by many factors, and I would be more concerned if we didn't have a president who had already come out and said that his #1 priority is jobs, jobs, jobs. So they're focused on it.
Yeah, absolutely. All right, great panel. Thanks, guys.
Thank you.